Welcome back, and joining me to look at the equity scene is Cremen from Adviceworx. Thank you so much for your time, Caroline. Quite a pleasing picture that we are seeing there, particularly the JSE reaching a record high. What are you making of the levels that we're seeing right now?
Well, I think it's fantastic. Really nice to see. Didn't think we'd be back there. Obviously, we're supported by the currency, which is particularly strong. And that seems to be a South African thing because emerging market currencies are relatively mixed. So it appears as if the post-election nerves are settling down a bit and people are really looking at our undervalued South African market and going in.
Well, actually, just on that, talking about the South African market, of course, the banks are heavily weighed to the market there and the rand. Absa coming out with interim results today, but really seeming to still be underperforming looking at the rest of its peers there. We saw only an expansion in the top line of 3%, but then obviously that growth disappeared as you went down to the bottom line. We did see a slumping there in diluted headline earnings per share of 5%. But even with all of that, we did see the share climbing over 4%. Were markets just looking past these results at this point?
I think they were looking past it. They weren't a great set of results. I almost look at apps as being the pick and pay of the banking sector right now. You know, it doesn't seem to be a happy place.
Yeah.
Especially from a management point of view. And I mean, there's everything, you know, I understand that there's a consumer slowdown, but, you know, those results are not great. And there's everything in place at the moment for our banking sector to actually do really well. You know, you did see bad debts climb a bit, but it's still very manageable. So I think, I think the market is giving them the benefit of the doubt and probably giving them the benefit of the fact that they're going to benefit from our increasing economic growth, which is probably true, but will they be able to capitalize it on it as much as a Standard Bank or Nedbank or a First Rand? And like I said, unhappy place, not necessarily the case.
Well, another counter that is in an unhappy place, but markets there also reacted positively, is MTN releasing its interim results. We did see group service revenue there down by more than 20%, almost 21%. Core profit also they're experiencing pressure, also a decrease in the bottom line. No interim dividend declared on that front. What are you making of MTN, but also the market's reaction?
Yeah, so again, I think giving them the benefit of the doubt, MTN, it's not an unusual place for it.
Yes.
You know, there's always seems to be issues in Nigeria. There's always issues with geopolitical unrest, like there is in Sudan. And always when you look at the company, you know, half of the African territories are doing well, and half are like under, repair. So I think it's a difficult investment for people to actually look at because you never know which way it's actually going to come from. So that loss was, I think it was expected. I think they did guide, if memory serves, and there's no interim dividend, which is also a little bit frightening. But also, I think for me, I think the two worries for me is that the service revenue growth is really, really poor, and then they managed to underperform Vodacom and Telkom in South Africa. So not too sure why the market is giving them the benefit of the doubt at this point.
Underperforming Telkom, that's actually quite an interesting one. Yeah. All right. Well, let's take a look at Thungela, also out with results. They're more than halving of their financial metrics, looking at core profit, headline earnings per share. Dividend was also cut by about 80%, but the company did announce a share buyback. What did you make of the coal players' performance?
Yes, I'm not a lover of share buybacks, especially when you cut the dividends so drastically. I understand that the share price took a knock, but I think I'm an old-fashioned stockbroker. I tend to not love that so much. When you're dealing with this almost like a single commodity player, you know, they're going to be affected by the coal price. And we did see that there was a milder winter everywhere. Obviously, our rail situation is not really, well, it's not where we want it to be.
Yeah.
They actually, interestingly, in their report, they actually say they're seeing that being repaired by mid-2025. So they're very hopeful that our GNU is going to come to
quite
the party
optimistic.
and rescue them, which is good to see. So maybe they're hearing something from government, and let's give them the benefit of the doubt. Nice company though, nice little
Yeah.
company.
Well, a counter that the markets did not give the benefit of the doubt is Hulamin. We did see a slump. That share price nosediving by about 8% after releasing results as well, seeing pressure on their numbers from revenue declining 6% all the way down to the bottom line with a decline on HEPS of 17%. Talk to me about those numbers and that reaction.
So I was a bit surprised about that. I wonder if it's not the fact that it's not necessarily the most liquid share on the market and people
Okay.
just kind of like the fact. But what I did look in, obviously this thing is also going to go with the commodity prices and things like that.
Yeah.
But what I really liked about this is that they did see local demand of 8%. So now I kind of look at because
Okay.
they're doing the rolled aluminium, so it's your canned goods and your Coca-Cola tins and things like that. That's really nice to see because it
Mm.
actually does, it's almost like a leading indicator of our consumer economy
Yes.
that's picking up. So maybe that GDP growth is a real thing.
All right. Well, let us get to your stock pick for today, Caroline. What are you
Okay.
picking?
I'm going international despite the fact that there's so much South African news, and I'm picking the 10x Global Dividend Aristocrat ETF. Its ticker is GLODIV. The reason I'm picking that is, first of all, it does appear as if offshore there is not really going to be a slide into recession. You've got a stronger rand now, so you can access offshore
Okay.
not so relatively cheaply. And also, we've seen a shift from on investment from investing into tech players, which is a really crowded trade, into more of what I call the plotters. So I think with interest rates coming down, a dividend aristocrat or dividend shares are going to become also increasingly attractive to investors. So there might be another kicker from there. And you're not going to have massive growth in a lot of sectors anymore anyway. So what I love about this ETF is that 57% of it is in the US. So it's actually lower than the MSCI World. And there is some Asia exposure as well, which I think is great for that. So I know South Africa looks good, the rand, but
Yeah.
use the strong rand to build your offshore portfolio. And this is quite a conservative, defensive way to do it.
All right. Well, thank you so much for your time and for your insights there, Caroline. Really appreciate it. That was Caroline Cremen from Adviceworx.